Hello, everyone, and thank you for tuning in to Brownfield Ag News for an update on global agriculture trade as the war in Ukraine kind of unfolds. Joining me again today is Mr. Gregg Doud, Vice President of Global Situational Awareness and a Chief Economist for Aimpoint Research. He also served as Chief Ag Negotiator for the U.S. Trade Representative's Office under the Trump administration. Greg, we touched the surface of this topic a little over a week ago after those initial attacks happened. Easy to say a lot has happened since then. So let's just start with a general update of the situation since we last spoke.
Well, it's been a historic week, the last week in the grains and the agricultural commodity business. We've now seen oil prices here, I don't know, somewhere around $120 a barrel. I think we're going to have an all-time high in terms of gas prices very soon. And the theme continues. We've seen an all-time record high in commodity futures prices for wheat in Chicago. And nobody's really kind of sure yet where this ends. I think there are other implications that we haven't been discussed as much yet. This corn market makes me very nervous, and I think there is a lot to discuss about the situation for vegetable oil in the world. So there's wheat, corn, and vegetable oils are the three dynamics in addition to what we have going on in the oil market. And of course, when we talk about corn, there is a lot to talk about there from a meat standpoint as well, because that's a key input there. And I think we'll start with this notion, if you want, of the fact that I believe the price of corn in China today is well in excess of $11.50 a bushel.
Well, I'll let you start with that, Greg. My next question was going to be kind of this whole global ag trade picture right now. What are you watching? And it sounds like China is still at the top of the list.
It is still at the top of the list, and that's because China has half of the hogs on the planet. And the interesting thing is that a couple of years ago, China, because of African swine fever, banned the swill feeding of hogs, banned the feeding of food scraps for pigs in China. And that means that there are a whole lot more pigs in China today that have to eat corn and soybean meal. And what we've seen as a result of that is a recovery in China's hog herd, increase in demand for corn to the point where now China is the biggest importer of corn in the world by quite a big notion, somewhere between 25 and 29 million tons of corn that they've needed the last couple of years. And I think they're going to continue to hang in there, considering the price of corn internally in China. So this is one of the new key drivers in the global corn market that certainly 4 years ago and even 3 years ago didn't exist.
Now, has that escalated per se since Russia invaded Ukraine, or is this something you're kind of watching separately?
Well, I think we're watching it because of that roughly, 30 million tons, 33 million tons of corn that the Ukraine exports. About half of that goes to China. And so if China, because the ports in the Ukraine have been mined, can't get that corn out of the Ukraine, it's going to have to get that corn from somewhere. And the interesting thing about that is we've got a shorter corn crop in Brazil and Argentina, which is in the process of harvesting their second crop corn here coming up in a few months. So depending on what the supply of that corn looks like, the only other alternative in the world, keep in mind, between Brazil, Argentina, the Ukraine, and the U.S., that's about 90% of the corn that's on the world market or exported in the world today. So when you have drought in Brazil and Argentina, the problem in Ukraine, and that leaves really the only other place on earth to get corn is and load it on a boat and go somewhere is the United States.
You mentioned China, and then, of course, the drought situation in South America. You know, the last 7 business days, China's purchased nearly 2.3 million tons of U.S. soybeans, and we've kind of tied that to lower production projections in South America. So definitely keeping an eye on weather in that area, too.
Well, one of the interesting things that you can tie to that is the price of soybean oil and vegetable oil in the world. And, we've got huge prices for palm oil coming out of Southeast Asia. As you mentioned, the drought in Brazil and Argentina. And now you add the blockage of sunflower seed oil from Ukraine and Russia. The only other place, again, to get vegetable oil would be to buy U.S. soybeans and ship them to China and crush them, not for the meal for the pigs like they usually do, but for the soybean oil, which apparently is what's driving those imports or purchases of recent purchases of U.S. soybeans into China. That is totally contra-seasonal. This is not the time of year that China is buying U.S. soybeans, but I think it's my understanding is it's driven by the need for oil, not for meal.
So sounds like maybe some higher input costs coming from this war overseas, but maybe some good news for our U.S. grain farmers in terms of exports and prices.
That's the old adage is the U.S. is the residual supplier of grains in the world, and always there is some truth to that. But the other side of that is when you get in a situation like this, we have adequate stocks here. And so there is the ability to get corn, wheat, and soybeans from the United States. Of course, the market has to sort out what price that is going to be traded at, and that's where that's what gets interesting these days, isn't it?
Indeed, it does. Well, I think we touched on a lot there on the grain side. Something we didn't mention last time we talked was kind of the impacts of this to the U.S. livestock industry and in turn, meat exports. What all are you watching there, Gregg?
Well, coming off of an unbelievably successful year for meat exports, all-time records for beef, pork, and poultry in terms of dollars. And of course, the pork exports are going to be a little softer because as China rebuilds its pork herd, they're going to need less pork imports. I think that's hurting the European pork producer a lot more than it is us right now. There's a retaliatory tariff of still 25%. I think that's just about the only agricultural commodity that China still does that on, and that's because of the 232 steel and aluminum tariffs that we maintain on China. So that is a challenge for the pork folks. But on the beef side of the equation with China, we sold them last year over $2 billion. I think it was $2.1 billion worth of U.S. beef. And now the question is going forward around the world, and in particular in China, what is the strength of the Chinese economy? It is softening pretty significantly from where it was a year ago at this time. Fourth quarter GDP was only about 4%, and the Chinese now say their goal for this year is 5.5%, with I think the World Bank saying about 5%. That's way off the mark from normal expectations of about 8% growth. So we have to see what China's demand for meat is going to be going forward, and looking at these prices, this makes this price forecast for cattle and hogs is very, very difficult now because of the price of corn. All you can say for certain at the moment is that these type of corn prices will reduce the number of placements in feedlots. And what that will mean in terms of meat prices and higher gas prices, and what that means for disposable income for the U.S. consumer and domestic demand are things that are very, very difficult to sort out at this time. There's a lot up in the air on the cattle side of the equation, but if we could, hold the export side of the thing together here, that would be an extraordinarily good sign for us for future years and going forward. But the situation is dramatically different now than it was a couple of weeks ago in these markets. So it's really difficult to tell what this thing looks like going forward.
Definitely. Any direct impacts from what's going on in the Black Sea region to our U.S. meat exports, or is it all kind of coming through just on the grain side and those inputs for livestock?
I think it's coming through on the grain side. And again, it's coming through China would be the way I would describe it. And so that is one of the situations. What will China do now with regard to the corn side of the equation and the meat side of the equation? That has to be watched very, very closely in the next few months here to see if they continue the way they were last year and they hang in there tough, or whether because of higher gas prices are going to affect today Chinese consumers almost as much as they are in the United States. So we have to monitor all of this to see what this says for us in terms of the price of live cattle going forward. But I think, so far we've seen the deferred futures out into next year hold pretty tough here. So we'll just have to see what the coming months bring.
You've mentioned gasoline prices a couple of times, and I want to dive a little bit deeper into that. Can you explain for folks how that does impact trade, looking at the fact that fuel prices are not only higher here in the US, but in other countries like China?
Well, let's start with this one interesting fact is that if you can tell me what US disposable income is going to be, I can tell you what retail beef prices are going to be in this country with over a 90% level of accuracy. The correlation between those two things is really remarkable and has been for many, many, many years. And so I think that speaks volumes as to around the world. You have to make the assumption today in many places, whether it's in Europe or in Mexico or in Japan or Korea, and now today China as well, I think that dynamic exists as well. And so we're in a very inflationary environment today with regard to food and fuel. And the ability for consumers around the world to hang in there and purchase food and these agricultural commodities in this environment is going to be something. We're off the chart here, off the map now. Most of what we're seeing here is historic. And so it's going to be interesting to see whether these correlations and the modeling hold true, or whether at some point we're completely off the radar.
Well, we've touched on China. We've touched on the situation in Russia, Ukraine, a little bit about South America. In terms of the overall global ag trade picture right now, Gregg, are there any other areas in terms of location or just ag sector that you're keeping an eye on at the moment?
Well, I think we have to watch Europe. And I think we have to see in these times of very high commodity prices, will European farmers really hit the gas pedal here in terms of planting more crops this spring? I think they have the capability to do that around the edges. I think they have access to the inputs, the fuel, the seed and the fertilizer more than the Ukrainians do right now. So I think that's one of the areas that we have to watch on the supply side of the equation. What will the Europeans do in this kind of environment? And then on the demand side of the equation, as I said, I think we have to, I'm really interested in what countries like Mexico and Indonesia and the Philippines, Vietnam, are they gonna, these are key markets for all of us in agriculture around the world. Are they gonna be able to are their consumers gonna be able to hang in at these prices? Or are we gonna begin to do a little, what we term in the commodity world, a little bit of demand destruction? Way too early to tell that now, because we just don't know how long all of this is going to last. But I think this is the question going forward in the weeks and months ahead.
And speaking of those weeks and months ahead, lots of unknowns, like we've mentioned, but I like to pick your brain, Gregg, on the top things to watch, maybe both short term and long term here. And let's call short term just the next couple of weeks, and maybe long term looking, on through the planting season here in the US.
So in the short term, I think the wheat thing is where it's at right now. I think there are still a lot of interesting conversations with regard to corn and vegetable oil. We have to know what kind of crop the Ukrainians are going to be able to get in the ground. That is a key component. I see these notions, well, they're going to plant half a corn crop. I don't think anybody has any idea right now what that's going to look like. And I don't want to speculate on any of that, but this is a very, very important piece of it. The interesting thing longer term is, I think the fertilizer situation for the most part is in place, or basically has to be in place at this point, because we're getting ready to plant in the Northern Hemisphere. But I think longer term, and we get into 2023 and the next crop in Brazil that's coming and into next spring, this fertilizer situation is going to be top of mind for a lot of people. I don't want to jump the gun here and predict anything at this point because we have absolutely no idea what's going to happen next week, little in the world that we live in today. But that if you want to look at short term and long term, those would probably be how I would divide it up.
Following up on that long term for fertilizer, what are the factors at play there? I know, of course, the amount of those products that come out of the Black Sea region. Anything else?
This is really complicated because you have different types of fertilizers. You have also nitrogen, phosphates, and potash. And I think the supply and demand situations, the supply chain issues, the countries you're dealing with are different in all three of those cases. And so that I am not an expert in fertilizer. I've listened to some of the experts in that industry talk about some of the challenges, and it'll cause you to rub your forehead here a little bit and realize that there are a lot of complications in the world of fertilizer. And I think this is going to be a really extraordinary topic for us longer term, no question about it.
Gregg, I'll let you put almost a farmer hat on for a minute here. If you're talking to farmers directly, what kind of questions might you be hearing from them, or what kind of advice do you have for them right now, kind of on this entire situation? What to be watching, what to be concerned about.
Yeah, there are lots of questions, and I understand that. I mean, the question is about fuel and fertilizer on the input side of this right now are obviously top of mind. And then the marketing challenges down the road, really, really difficult to know what kind of advice to give everybody right now. I think the answer is you try to lock in margins in the immediate term the best you can. And hopefully, you will able to get access to what you need in terms of fertilizer in particular. I think everybody's going to be okay here. But we'll just have to see. This fuel thing, though, is really extraordinary. We're now right at about $5 a gallon on diesel fuel here on the East Coast already, and I think this could get a lot more complicated. But then again, if things calm down here in a few weeks, maybe things will be in a better situation. It seems like I'm rambling right now a little bit, and I kind of feel like it because this is a tough world to know what's going to happen day to day in this kind of environment. It makes it difficult.
All right. Well, Gregg, we really appreciate you taking the time to update us on this. For any other ag news updates on global trade following Russia's invasion of Ukraine, our listeners can tune into the local Brownfield Ag News station or visit us online at brownfieldagnews.com.